the crypto markets are up. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. How's it going?
Good morning.
Yeah, we're having a green kind of day. So, Lawrence, it's tough to...
Yeah, so markets.
So markets, all right, fine, fair enough. All right, checking in on Bitcoin, the CoinDesk Bitcoin price XVX index is currently at $37,231. Bitcoin is slightly up, almost 3% over the past 24 hours. And the CoinDesk Ether price ETX index right now at 2694. ETH is up about almost 5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, Lawrence, so you're not oppressed by the markets, but there is at least one coin that is doing well, and that's Doge.
Yeah. Yes, as you were saying, the market's kind of soft today. Nothing really happening. Bitcoin is below its 100-day moving average, which is about 38,300. And the CoinDesk 20, there's like nothing going on except not on the CoinDesk 20, but what's really exciting is Dogecoin. Dogecoin is up today. Its big news is that Coinbase Pro is going to allow trading on Thursday. That's not necessarily news because Brian Armstrong said last month that, oh yeah, we'll eventually let you trade, we'll let our customers trade Doge. But right now it's available at Coinbase Pro. It's not available on the retail platform yet. Well, we'll see what happens. I mean, look, I think they're looking at the likes of Robinhood and they're like, hey, we're missing out on the action. So they're weighing, there's kind of snobbery against Dogecoin for the spreads they could be making.
But getting a listing on Coinbase Pro certainly opens up the market to a whole new audience. And Emily, you must be pretty psyched, not only for Doge, but in other news, China is actually having a huge piece of news right now. They're shifting to a 3-child policy to keep their economic boom running.
Yeah, but we'll see how this goes because they've had a 2-child policy for some time now, and that hasn't really changed things enough, apparently. So it seems unclear why people would suddenly want to have 3 children, and it seems that the government is definitely worried about this. So the questions are, what does this mean for the economy? What does this mean for inflation? It's unclear what the connection is to crypto just yet, but yeah, it's definitely a major story in the global economy.
Yeah, and a stunning change of events. Well, in other news, disruption to the value of stablecoin Tether could collapse the crypto markets, according to former CFTC Chair Timothy Massad. In a Bloomberg op-ed, Massad compared the hypothetical event of Tether's value falling below $1 with the Lehman Brothers Reserve Primary Fund breaking the buck in September 2008, the day after the bank filed for bankruptcy. Joining us now is Timothy Massad, Senior Fellow at Harvard University's Kennedy School of Government. Welcome, Timothy, to the show. So we've seen a run-up in crypto in the markets over the past couple of months. Do you think Tether has something to do with it?
Well, I think, as you all have said, Tether is very important to the plumbing of the markets. It allows investors to easily move value from one exchange to another, from one crypto coin to another, without converting back and forth into fiat. So it has become very important, as indicated by its size. And that's why I think it deserves closer attention.
Chairman Massad, you said one of the big concerns in your piece, and one of the big concerns about Tether is that things could go wrong, of course, when its assets on its books go south, should that happen.
Right.
But the thing is, we don't really know what's on Tether's books. They don't really publish they didn't publish the quality of the commercial paper, and yet that's a majority of their assets. So how would there be a run on something if we don't actually know that their assets are down?
Good question. It's just if people get concerned about it. You're right that we don't know enough about what its reserves are, what the quality is, and we should know that. I mean, something that's going to call itself a stable coin or market itself as such should be, in my mind, disclosing a lot more information about its reserves. The Financial Stability Board, the global collection of regulators, responded to Facebook's announcement or proposal of Libra by developing some principles. And they said no global stablecoin should be allowed to operate unless it meets these basic principles, which had to do with reserve disclosure and management, risk management. Well, the fact is the horse is already out of the barn. The FSB doesn't seem to appreciate that. You've already got Tether, which is a global stablecoin, operating without making sufficient disclosure. Now, the little disclosure we have is largely due to the New York Attorney General's office bringing their enforcement action a while back over affiliate loans and so forth. And so the New York AG, to its credit, has required some disclosure, but it doesn't really have the power to require enough. So Tether has disclosed basic categories of assets, like 50% commercial paper. But what is that commercial paper? If Tether really is buying 30 billion of high quality commercial paper, meaning the most highly rated commercial paper, traders at major institutions would know. And I'm not sure that's what they're buying.
Do you think that it could be, for instance, they're buying the commercial paper of related entities or people that they may have interests with, and they may not be? I don't know. I don't know what they're buying. I don't think we know enough. We don't know enough about what the loans are that they say they've made. One of the things you brought up was the regulatory aspects. What can the United States regulators do? What can they do with the dollar?
Sure.
The dollars that Tether actually holds, the few that they do hold, that would cause a change in its use as a dollar-backed stable, or at least a dollar proxy.
Sure. Well, as I've said, we need to enhance our regulation of the crypto industry generally, not because I want to, limit it, but because I think regulation will, over the long term, provide for better growth opportunities. So in the case of stablecoins, we need more disclosure. We need a framework for more disclosure first, and basic policies on reserve management. That may require legislation. There may be ways to get there otherwise that could be explored. The Financial Stability Oversight Council could, begin looking into Tether and ask for some information. The first thing, we need in a lot of these areas is simply more disclosure.
How concerned are you about all the other stablecoins out there, like USDC, or there's kind of a stablecoin boom right now? Which are you concerned about those as well?
Yeah. Well, I'm less concerned only because some of those are keeping their reserves in U.S. Regulated banks, and under the OCC guidance, those banks are supposed to be verifying the amount of reserves. So, that's better. It's not a complete framework, but it's at least better. I think, though, that we do need standards generally for stable coins to, ensure that they really are stable.
One possible approach to this problem that's being floated around is the U.S. issuing its own digital dollar, central bank digital currency that would sort of be officially backed. Do you think that this would address this problem? And in general, do you think a digital dollar is a good idea?
Well, I think a digital dollar should be actively explored. I'm glad to see that the Fed is doing that. I think there are a lot of design choices that we have to think about, a lot of issues about how do we balance privacy, for example, which is very important. We're not China. We don't want the government to be able to see everybody's transactions. But I think the day is coming when we will have a digital dollar. Now, one way you could envision that, though, is it's kind of like the Fed provides the operating platform on which private institutions build applications and sort of do stable coins on top of some kind of basic Fed CBDC. That's attractive because, look, initiative and innovation is always going to come more from the private sector than the government. I mean, that is what's great about the crypto industry is you have a huge amount of talent, huge amount of innovation going on. I have some concerns about where some of it is going, but I want to see that continue. I want to see that innovation and young people and money and talent going into the industry continue. So I think about CBDC in kind of a similar way. How do we build something that's still promotes and enhances innovation in payments and in financial services.
Chairman Massad, why do you think the crypto community is not taking this situation with Tether all that seriously, or paying, at least not as worried as much as you are? Is it that it's all smoke and no fire? We're seeing a lot of pushback. Particularly you'll see on Twitter, some people will say, well, Tether is only a couple of $1 billion are on exchanges. Most of it's used in, say, DeFi or in transfers, et cetera. This isn't as big of a deal. And in fact, they're even saying, well, it's going to be the reserve currency of tomorrow. What do you think is the motivation behind all of this? Are they just...
Well, that's a good question. Look, I recognize that a lot of people who are holding Tether aren't looking to convert in and out to fiat currencies regularly. They're looking more just to convert back and forth into other cryptocurrencies. And so, Tether provides that for them. And so they don't worry that much about its value in dollars. Also, maybe aren't a whole lot of other choices. But, that can change quickly. I mean, people could start to get concerned, or there could start to be a problem, and that might change. So, that's why I'm concerned.
Wouldn't they just leave Tether and just go, let's say, to another stable coin? If there are alternatives out there.
If a lot of people try to leave Tether at once, are they going to get, their money back? That's the concern. Could Tether really handle a lot of withdrawals?
Well, they haven't redeemed it. It doesn't seem like they've done much redeeming since 2018. It looks like as if, from what I've heard, is that at least it's been very difficult for people to get their dollars back already, and that's even before there's an issue of a question about the credit quality on their assets.
Correct. Look,
can you have a run on a cryptocurrency if you can't have a run on a? Can you have a run on a cryptocurrency like Tether if there is no ability to redeem anyway?
Well, but if you have everybody demanding to get out, then you've got a problem, and you're going to have a lot of people upset. And then if they're leveraged, if they have leveraged positions, they're trying to cover or deal with, and they can't get the value out of Tether, then that's a problem, and that can have ripple effects. I mean, that's a concern. Again, I use the example of what happened in 2008 just to show how even a small change can trigger this kind of problem, because you had the reserve primary fund, the oldest, almost most venerable money market fund ever, that had just barely over 1% of its assets in Lehman paper. But that spooked investors. Obviously, we were in a very scary time because it was the financial crisis. But 1% of its assets, the reserve fund, was about the size of Tether, and that led to a run on the reserve fund and then a run on money market funds generally. We don't want that kind of situation. So that's why I think, again, we need a stronger oversight, stronger disclosure, and hopefully Tether, is cleaning up its act a bit as a result of the New York Attorney investigation and other things, so that it could handle liquidations and redemptions.
If they do exit Tether, there would be a run up on Bitcoin or other cryptocurrencies, and that would improve the price of Bitcoin.
Or maybe they'd go into other stable coins.
Yeah, but then again, I wondered, Mr. Chairman, if the report that, I'm just speaking to the Tether proponents here, they would say that, Tether has been investigated thoroughly by U.S. officials or state officials in New York. They have to report to New York officials. Is that not enough? Is there still something in there that is not, comfortable with you, even though they are going through this rigmarole, this due process of going through their documents?
Well, I mean, look, it's really pretty minimal reporting. I mean, with all due respect to the Attorney General of New York, they don't really have the regulatory power to impose, this kinds of standards that the Financial Stability Board, for example, wants to see all regulators all over the world impose on stablecoins, which would be much more fulsome disclosure about reserves and better reserve management. So, we don't have that. Yes, they did bring this one action. Yes, they are asking for this minimal quarterly reporting, but it's really not very much, as you all noted at the outset, with the fact that, we don't know anything about the so-called commercial paper that they have.
Mm-hmm. Chairman Massad, very fascinating conversation, great critique. Thank you for joining us this morning.
Thank you for having me.
Right, that was Timothy Massad, Senior Fellow at Harvard University's Kennedy School of Government. It's a healthy conversation to have. Coming up, checking in with Asia with Bobby Lee and the Daily Forecast. Time now for the Daily Forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, June 2nd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Let's get you up to speed from Asia to the world. Our first story is a little out of this world, literally. Space Chain, a Singapore startup, is sending its blockchain technology all the way up to the International Space Station. The company's node, which will store blockchain data, is set to blast off aboard a SpaceX Falcon 9 rocket this week, Thursday. The mission? To develop the company's smart contract capabilities and explore offering extra secure services for customers like digital banks.
Now, because the commercial space is really coming up and the cost of launches has dropped significantly, and so it leaves a lot of room for innovation and for some integrates like us to actually make it happen.
Blackouts on Earth, internet disruptions, or intentional or accidental outages is a risk that having blockchain node in space actually ensures against.
Where it would have a very significant role is in the supply chain to track resources in space programs and projects, which tend to be very large scale.
In this case, it can also be the ultimate backup for the world's data. And coming back down to Earth, Cardano has selected Chinese public blockchain Nervos network for its first cross-chain bridge. Now, the Nervos Force bridge will unlock cross-chain transactions for Cardano and Nervos users, and that means ADA and CKB holders can soon transact with one another.
我们想让开发者呢，能够在Nervos 上面做过的开发的应用呢，能够同时服务到其他链上的
Meanwhile, China's digital fiat ambitions, or ECNY ambitions, are intensifying once again. Beijing has announced that it will be issuing 200,000 digital red packets filled with ECNY through a lottery system. Now, each red packet or envelope, traditionally a cash gift that's handed out on special occasions or festivals, will contain 200 ECNY, or about $31 US. And those who win the ECNY drop will have about 9 days to use the money at nearly 2,000 designated merchants in the city. All right, catching up with Bitcoin, up by over 8% today, trading over $37,000 as of 4 p.m. local Hong Kong time at the end of the Asian broader trading day. And in the top 10 for cryptocurrencies, Dogecoin heading up after a Coinbase Pro listing today, up 22%. The rest of the top 10 in green today. And finally this, NFTs are continuing to make a splash in more ways than one as more exchanges this week started throwing their weight behind these assets. India-based Wazir X announced the launch of its NFT marketplace on Monday. So far, it's received over 15,000 applications, it says, from creators and collectors. Meanwhile, over in Korea, South Korea's Corbit also launched what they say is the country's first NFT platform on Monday. And from Taiwan, singer and actor Vanessa Wu of globally renowned boy band F4, he's inviting fans to submit selfies to create an NFT collage for charity. I had a chance to speak with him earlier this week.
This nostalgia of everything kind of is taken away, but I like to see how now the nostalgia of like baseball cards are coming back in a digital form to the next generation.
Bridging generations, bridging nations, and bridging our world to outer space. It seems there isn't much that isn't within the reach of blockchain technology, at least today. That's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm editor-in-chief Angie Lau. Until the next time.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, lots of news out of Asia, including voting on a proposal to reimburse Mt. Gox victims begins this week. The draft rehabilitation plan to reimburse victims of the collapsed crypto exchange requires a majority vote from all creditors in order to pass by October. Joining us now to discuss is Bobby Lee, the co-founder and former CEO of China-based crypto exchange BTCC, and the founder and CEO of crypto wallet startup Ballet. Lee is also a member of the Bitcoin Foundation's board of directors and is the brother of Litecoin creator Charlie Lee. Welcome, Bobby.
Good morning. Thank you for having me.
Good morning. Good to have you as always. So, first off, are you a Mt. Gox victim? And if so, what are your initial thoughts on this draft rehabilitation plan?
So I am not. Fortunately, I didn't have any of my assets on the Mt. Gox exchange in early 2014. Yeah, so this has been a very long ordeal for the people who have their money tied up there, and I guess the value of Bitcoin having gone up, and given the fraction amount that they have fighting for, I guess there's some consolation, price if they get that spread out.
According to CoinDesk reporting, the total value of each claim is denominated in Japanese yen, with each Bitcoin being pegged at nearly 7,000, the rough price of Bitcoin when the civil rehabilitation began in 2018. And that's not the $37,000 price today, which must be frustrating. So are people being compensated in only Zen or a mix of Bitcoin and cash?
Yeah, it's going to be pennies on the dollar, but it's still, they're going to get some money back as opposed to nothing, right? So the value, like I said, the value of the Bitcoins held in the Mt. Gox trust has gone up. So there's more money to go around, and let's hope it gets passed, and gets approved, and get the money out back to the people.
Meanwhile, the ex-head of China's digital yuan effort is saying that central bank digital currencies could operate on Ethereum, and that CBDCs will one day be more smart and not merely digital versions of cash. Sounds like the Chinese government might be willing to work with public blockchains.
I don't know. We'll have to see. The main issue with CBDC is that these are digital currencies that they control in terms of the transactions, the clearing of it, and also the supply limit, right? So the supply limit, I guess, is very apparent, but it just really comes down to, so the best example for normal people is that bank accounts are account numbers that are assigned to you. We never get to choose our bank account number. However, with digital cryptocurrency, the private keys generate the account numbers for Bitcoin, Ethereum, and the private keys can be completely generated by a user device with no assignment from a central bank. So that's a fundamental conflict. The question is, are people allowed to create their own account numbers and have exclusive control of their private keys, or is it something that has to be assigned to you by the central bank? So, the proof is in the pudding. We'll have to see if these CBDC issuers eventually do move to the public blockchain and do allow real people or companies to create their own private keys through their own devices without being assigned.
Hey, Bobby, speaking of China, something that we alluded to earlier in the broadcast, we said that China is now allowing a 3-child policy. It had spent years doing the 1-child policy, of course, and then 2-child about 5 or so years ago, and that didn't work. So what is it telling us about China's economy overall, and its future prospects, and what will that mean for crypto?
Yeah, well, I was going to short circuit to a thing about China is nothing is permanent, that all the laws and regulations can change, and they do change. The 1-child policy is a shining example where it's been that policy for decades, and then 5-6 years ago, they loosened it up to a 2-child policy, and now a 3-child policy. So whenever I use that example, when people ask me, will China ever have cryptocurrency exchanges? The current answer is no. The regulatory agencies don't allow for that. And long term, I think there's a chance that they will allow for that. If the stars line up, so to speak. Now, when it comes to how does the three-child policy directly affect cryptocurrency, I think the how many child are allowed in the family, it's more about the population. They certainly don't want to see a decline in population, which is why they're opening it up for more people to have more children. And I think even today, as a three-child policy, I think it's inevitable it's going to just be loosened up and not have a strict policy as well. I think the country has grown very much over the years, not just in population, but also in economic sort of might, if you will. So a lot of the old rule style enforcement stuff, including the migration plan where people are allowed to live. So China still has a hukou system where people are assigned a province where they are supposed to live in. If they move across provinces, they have to apply for the ability to move across borders, so to speak, within the country. And I think that system that system was really strict decades ago, whereas today there's more flexibility, there's more movement, and so on. So you'll see China continue to change in the coming decade to accommodate its growth and economy.
Bobby, China and crypto has been in the news a lot over the past couple weeks. I think you and I first spoke in 2017. You really know the whole history of this. Can you really break down in the most simple way what is new about these recent Chinese warnings? Because we've seen versions of this in 2013, 2017. What is new here? Because people seem to be having a hard time making sense of it.
Yeah, there is news. What's new is the intention to enforce. So let me repeat that again. They're having a new look at the cryptocurrency situation in China, more specifically mining, and also the legacy stuff, which is the trading, exchanges, the leverage trading, and so on and so forth. So the new aspect is they have announced their intention to really enforce it to a stricter degree. And this is the enforcement of what was on paper sort of issued out in both 2017, the September 4th document of 2017, as well as the December document of 2013. So again, China traditionally has chosen to be very sparse with its words and legislation, and then to use a control of enforcement to achieve their objectives, right? So
although they looked pretty strict.
Yeah.
Before, but I guess the other question is why now though? I mean, what do you think? Obviously this has been a continuum, but what do you think is the main motivator now for China to issue these warnings?
I think possibly the price. I mean, I ran an exchange for many years, and for a while, it was surprising to me that the price would be an issue, but apparently the price is a sort of milestone issue. When the price goes up a lot, they get worried. And I think the fundamental reason is not so much Bitcoin is expensive, but rather when the price goes up, it attracts a lot of traders. And when you attract a lot of traders, you can have a lot of FOMO, fear of missing out buying. I talk about it in my book, The Promise of Bitcoin. And when you have a lot of FOMO buying, what happens is inevitably the market can crash due to high volatility and people can lose their money. And when people lose their money, the consequence of that is social unrest and people blaming the government for poorly regulating this industry. People lose their money. So that's the thing that they're trying to avoid. The ultimately, which is people losing money, people getting hurt.
The question is, though, will it work, though? Because, like, in the past, Chinese crypto traders, better than anyone else, are very savvy, right? They always find ways around all these regulations. And China's had kind of a string of crackdowns throughout the years. And, like, is this time going to be any different? Like, are we actually going to see a real effect on Chinese crypto trading? Or are people just going to find other ways, to keep doing what they've been doing all along?
My theory, my thinking is that the regulators are not trying to prevent the existing crypto traders from trading crypto, because the existing traders, like as you have said, are very sophisticated. They've been trading for many years. They're comfortable using leveraged trading products, these derivatives, futures, contracts, and so on and so forth. However, I think you asked me, has it worked? Well, in some sense it has, because in some sense it has worked. And the reason I say that is because you look at the population, 1.3, 1.5 billion. The country as a population, the whole country has not gone on to trading crypto. Only a small fraction have. Now that small fraction is a large number in actual number of people due to the large country and the early start. But in some ways, the whole country didn't get into crypto the way they get into stocks and real estate. So in that sense, maybe it has worked. I don't have the statistics, but in a different sense, it certainly doesn't slow down the price of Bitcoin, because Bitcoin price has to go up to where it needs to be to satisfy a global market for Bitcoin and cryptocurrency as the sort of global reserve currency that I talk about.
Mm-hmm. Bobby, really interesting insights on China and Asia at large. Thank you for joining us this morning.
Thank you.
And that was Bobby Lee, co-founder and former CEO of BTCC and founder of and CEO of Crypto Wallet Ballet. Coming up, crypto markets analysis from analytics firm Marketgauge, global policy and regulation update with CoinDesk's Nick Day.
When we say we want to reimagine money, it turns out we're going to the heart of the matter. Imagination has always been a key part of what money is. Imagination in the form of cultural creativity is also something that the cryptocurrency community has in spades. And to the outsider, that can be a reason to dismiss it as frivolous, as something built on nothing. To dismiss it for these reasons, though, is to ignore that all money is imagined.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time for our live look at Bitcoin. The CoinDesk Bitcoin price XPX index is currently trading at 37,721. Bitcoin is up about 2.3% over the past 24 hours, and the CoinDesk Ether price ETX index right now at 2743. ETH is up almost 7% over the past 24 hours. And joining us now to discuss the crypto markets is Michele Schneider, Managing Director at Marketgauge in New Mexico. Welcome to the show, Michele. So just at the top, what is your outlook on Bitcoin? It's kind of looking sluggish between this 30 to 40,000 range, unable to break this 40 resistance. So how long do you think we'll be stuck here?
Well, that's kind of hard to say, but I am happy as a somewhat technical trader that we've seen a reduction in the volatility right here, because we actually have a trading range to look at. That's good news. So everyone's looking at the 40,500 mark as the place for it to break out. What's been interesting in terms of the charts is Bitcoin has made lower highs and higher lows. So it's forming almost like a wedge pattern. So we're on hold here, but still very interested in potentially not only going long Bitcoin, but also looking at Ethereum again, which we were in and have been aside now in the last couple of weeks. So I do believe that we will see it go up at some point. However, like I said, to me, I think patience right now is probably not the worst thing in the world.
So Michele, is this a buying opportunity, and are trusts getting more competitive? We see more and more trusts popping up. Any trading at a discount? Which is your preferred one?
Definitely the trusts for us, only because I have a lot of people who don't still really understand how to go and buy the actual coin, which is something I think we talked about the last time. So we've been doing very well. We haven't touched GBTC in a while, but we've done ETHE as a trust, and we're looking at that today again to see what happens around the 26 to 27 level. Again, patience being key. And also Coin, actually, COIN, has been an interesting instrument trying to bottom out here. So there are definitely opportunities if you don't want to look specifically at doing the coin. And that's, of course, just for Bitcoin and Ethereum. Once you're getting into some of the other coins like XRP and Stellar, et cetera, you have to go to the direct coin. And that's really where the growth will be, because right now I think there's a tremendous number of people who are totally in the dark on how to do that, because it's complicated.
Michele, there's been so much drama over the past few weeks, with China and Elon Musk. And I guess, is there anything, what's just catching your eye now? Because it kind of seems like things have sort of calmed down.
Well, the mining issue, I was just listening to the gentleman on before you. The mining issue is definitely an issue, although there has been an interesting development there with Canaan, which is a Chinese mining Bitcoin company, coming out and urging that China relax the restrictions for green energy. And so I think this green energy fight was something that we'll see continue. And Canaan, the stock itself, which is the symbol CAN, did very, very well as a result. If that gets more resolved, I think that will be a boost to the whole industry. But the news in terms of the crypto space continues. Guggenheim actually just announced a new fund that will have some dedication to crypto. As you know, some of these old timers, last time we talked about Charlie Munger. Well, now you have Carl Icahn, who said that he's looking at crypto. Ray Dalio said he'd rather be in crypto than in U.S. bonds. So to me, the whole space really still is positive. And another comment I heard earlier in the show is no matter what restrictions get put on, whether it's from the SEC or the U.S. government or the Chinese government, there are workarounds and they come out every single day. Wall Street Bets now coming out with sort of an idea of doing a DeFi crypto exchange. So yeah, there'll be workarounds all the time.
Michele, aside from Coinbase and the trusts, what are your three stock picks right now that are related to crypto?
Well, Riot actually had a really good day yesterday. We're looking at Marathon as well, which again is related more to the mining situation. And Square, all of these things have really gotten sort of hammered through this drop. And they may be presenting as good opportunities. Again, I would probably be a little bit more patient because I want to see if crypto can hold over 37,000, if Ethereum can hold over 2,500, and if we start to eke our way up higher, those stocks would be interesting plays.
All right. Michele, thanks for joining us and offering your crypto markets analysis.
Thank you so much.
That was Marketgauge Managing Director Michele Schneider. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. Good to see you. So over the last month, the United States has been the target of several major cyber attacks, from the fuel industry with Colonial Pipeline to government computers with Microsoft. And now the meat industry has been a target. The world's largest meat packer, JBS, is closing down all of its U.S. beef plants. So how is DC reacting?
Hey, good morning. DC is starting to take a look at this. It's officially too big to ignore. Yesterday, a spokesperson for the White House, told a group of reporters that the U.S. President Joe Biden has created a review to look at how the federal government responds to ransomware attacks, and part of that is quote expanding cryptocurrency analysis for these payments to the perpetrators of ransomware attacks.
Nick, what does this mean, though? I mean, because we've definitely heard recently a bunch of regulator types talking about crypto and crime and ransomware. What do you think this signals going forward?
Yeah, I think the big picture here is you remember Janet Yellen when she was testifying before her confirmation as Treasury Secretary. She was warning that crypto's use in illicit transactions is a concern for her. You've heard other regulatory types say, how crypto is being used in various crimes, including ransomware, which, crypto is, I don't think you can argue that it is a major enabler of a lot of recent ransomware attacks. So just the fact that it's now gotten to a point where you have the U.S. president even, paying attention to it, it shows it's too big to ignore. There has to be some kind of a solution. Either if it's not industry driven, it will be regulator driven. So I think it's in the industry's best interest to try and figure out how to possibly mitigate this, or what solutions there are to kind of lessen the impact of these types of attacks.
Besides the attack on meat, what other things are you looking at, Nick?
So honestly, ransomware is kind of, I think, going to be the big story right now. We could talk about ETFs and all these other things that have been kind of in the workflow, but it kind of feels like a lot of this is getting superseded by this risk because ransomware is kind of going beyond just the companies themselves. When Colonial Pipeline was shut down, that impacted fuel availability to much of the eastern seaboard of the U.S. JBS is now, it had to shut down a bunch of plants, and now they're warning that there might be, meat shortages employees have to take time off because, they literally cannot go to work. So there's a lot of these kind of second order effects that are, I think going to branch this out far wider than, some of the other crypto issues we've been looking at.
Mm-hmm.
Marcy will be happy.
Yeah, Nick, thanks for the update. Really scary stuff, but thank you for monitoring it.
Thank you.
All right, that was CoinDesk Managing Editor of Gold Policy and Regulation, Nick Day. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.